Hello, this is the Chart Profit video, Friday 15th of June. Looking here at the E-mini S&P from the pre-open today. We're looking at the September contract from this week. We've seen no significant selling on the profile for 36 days. I'll mark that in red going forward. We have seen significant buying. This was the last instance over here, aggressive buying on the 6th. Market generally has moved higher over that period, indicating that the buying has been effective. Therefore, I assume the buyers are still in control of the day frame. In any event, as long as the E-mini prints above 27.18, which is the 12-month controlling price, it's in a strong price location. We've gone into a range here, more or less this week, a little lower today. As I said, in the longer term, the support is at 27.18. So translating those buying and selling imbalances over onto the pulse chart, we see the green and red at the top here. Translating to the spider chart, this was the last mark I had from the sellers. That red bar, and from there it's been pretty much green. All the imbalances that I have marked have been green. Here's the one that we just saw on the pre-open there. And we have a better environment at the bottom here with the daily breadth indications being green, which is supportive, and the price oscillator above zero and currently heading higher. Just a warning here, we see if the market does turn over a little here and the price oscillator turns over, what we'd have is a higher high on the price but a lower high on the momentum indicator. That would show a lack of confirmation for the uptrend at that point. Here's the E-mini September contract. Here's the support, 27.18, until we see some red appearing from the sellers on the daily chart I discuss and comment on each day in the pre-open. There's no sign of weakness, and if I turn it into a weekly chart, just look at this week's bar relative to last week's chart. Currently doesn't look too much to worry about. Longer term support for the spider chart is at 271.70, that's the 18-month. IWM, the small cap ETF. Small caps continuing in the longer term to outperform and doing pretty well this week. UK's FTSE 100 large cap index ending the week most likely here, just about ready to close at the moment, below its 3-month controlling price. Down a little on the week and in a weaker position here. We've been watching this support level on the DAX from this high to this low. This dotted line here is the halfway point. It's up off there, and that's the first level support. Sentiment has come off really overly bearish readings a few weeks ago. Some of these indicators picking up. One obvious one to watch is my version of the RIDEX assets ratio that was sharply higher yesterday, up to 22.65, which is historically an extreme reading, and that was up from 17.06 yesterday, so that's quite a jump. Anything above this level, above 24, would put it back in this kind of range here. So there's only just 2 or 3 readings higher than that, higher than this point here, and they're all here in late January, corresponding to this top in the market. So we need to watch these extreme levels if they're reached. If we isolate the bull fund assets here, you can see that yesterday's jump in the ratio wasn't really down to massive increase in the bull fund assets. It was more due to this sharp fall in the bear fund assets. And again, we watch this dotted line at the bottom here corresponding to this extreme low in late January over here, again corresponding to the top. In the public poll this week, the bulls percent was higher at 44.8%. That's now a 17-week high. Bears percent was lower this week at 21.7%. If we look at the investors' intelligence poll, the newsletter writers, bulls percent was higher at 55.5, which is a 4-month high. Bears percent almost unchanged, 17.8%. We look at the 4-week moving average of the net, that's the bulls minus the bears. The 4-week moving average here is the black line, currently at 33.4, but it fell to 24.4 just 5 weeks ago. That was the lowest since November 2016. Markets more or less been rallying from that point, that extreme. Kind of in neutral territory at the moment, as is my Lipper US fund flows indicator. They reported equity fund, including ETF outflows, this week through 13th of June at a negative 9.7 billion. 4-week flow number, the black line here just below zero. The extreme load readings for this indicator here and here which are here and here on the chart. Again, kind of neutral at the moment. Interesting that TLT, the T-bond ETF, found support here at the 6 month at 118.50 just a few days ago, and has now rallied back to probe up into the major up here at 121. We've been saying that a higher low and time spent above that level would put bonds back in a strong position, and we're just probing that level at the moment at the end of this week. So if we just let price be our guide, time up here would be bullish, time below 118.50 would be bearish. USO, the oil fund ETF, still in a long-term bullish strong position, but the first support level on this chart is at 12.79, and price below here put the oil ETF in a weaker price location. GLD, the gold ETF, also sharply lower at the end of this week, looking like it's ready to test the major at 121 on this chart. Price below here would immediately be a weaker position for gold. So a number of charts at or approaching important levels. The dollar index is another, as we talked about in the recent video. This level here at 94.80 for the index on a 30-minute basis actually is the 6-year controlling price. We've probed it once here and attempting to again at the end of this week. Price printing time above this level would suggest another leg higher for the index, but this is currently resistance. An indication that we may see that develop. More strength for the dollar is the fact that the Euro FX chart has moved into a weak position this week below its 1 year, which is this level here at 117.55, and we now reside below that level in a weaker location. And the pound also close to its major support here at 131.70. Again, if we see this develop and print time below that level, that would be weak price location as well for the pound against the dollar. That would be further evidence of another leg higher for the dollar, and we conclude there. Once again, I thank you for watching.